Questions? You want to do the one on your desk first? Why don't we take the hands that go up first? Okay, sister. How do Islamic bonds work? Bashar, you want to take that? You can just take it from there? Sure.
The Islamic bonds, actually we refer to it Islamic bonds, but it's actually sukuk. Usually, the sukuk, they are based on purchase and lease transaction, where the typical bond or the conventional bond, they are based on lending, borrowing, and interest. So lending, borrowing, and interest is just like it's a debt instrument. The company issue IOU certificate, sell it to lenders, because again it's lending, and then the company guarantee a fixed payment called the coupon, and then the principal is guaranteed, so it matures at certain period of time, 5 years, 10 years, 20 years, etc. In the sukuk, no, it's different. So in the sukuk holders, they themselves become the owner of the underlying assets. So they purchase the assets and then they lease it to the company. The company pay, again, it's a coupon, it's fixed in this case, but it's a lease. So the sukuk holder they carry all the ownership risk. So in the, as you see in the sukuk, it matures, of course, like again 5, 10, 20 years, etc. And then somebody purchased the underlying assets, or maybe the company itself purchased the underlying assets. So in the bond, it's money versus money. There is no assets involved. Where in the sukuk, no, there are really assets purchased there. There are really risk. And also in the bond, you could borrow as much as you want. In the sukuk, no, they have to be the tangible assets. You cannot borrow more than the size of the tangible assets. So that's the difference between the two.
Mohamad, did you want to add anything? Real quick, I want to give a very simple example, just maybe to clarify. Let's say Emirates Airlines, and this is actually what happens with airlines in the Middle East, they need a new plane. They don't have enough cash, so they issue a third-party entity, which is a sukuk, that is funded by investors. That sukuk goes out and buys the plane and leases it back to Emirates. So it's an asset-based rental institution, as they were mentioning. We have a lot of written questions, but I want to take the hands first. Do you guys think that's right, or you want to do one and one? Huh? Okay. Go ahead. Okay. All right.
Islamic Halal accounts. If there's any Islamic ETF, and then the expense ratio for all the Islamic funds are very expensive.
You want to take
that? Okay. Hello. This is working? No. Next to each other? Yeah, because we want to pass them around. Okay, so the first question I think was...
He's asking about ETFs.
Yeah, ETFs. I think they're in the U.S. Savings account, meaning like a bank savings account? I'm not aware of any. Maybe, I think UIF Bank might have some type of a CD, Islamic Sharia compliant. I'm not sure, but we don't have it. I don't think the investment, you have to check with the bank. So UIF Bank in Michigan, or maybe Devon Bank, and they're here in Chicago. But that's something you have to check with the bank. Regarding ETFs, Islamic ETFs, I know there was one there was one when it closed. I'm not familiar. I'm not sure if there's any more that has opened up. It's a little bit harder for ETFs. There has to be some kind of demand for trading to keep it volatile and keep it, so that because the costs are so low, you have to have volume. You have to have large assets in there. And the Islamic finance industry is still in its infancy. So hopefully, inshallah, with time it grows. I think that might grow with it. And the third question, expense ratio. Maybe we're at 1.33. That's maybe a little bit high, but for our size, for around $100 million, I think that's somewhat reasonable, because you have to cover your costs. I believe Azad might be at 1%. I think you guys cap it. Amanda can speak. I think they have a discounted rate, actually, 0.86. So I think those are very inexpensive in general. You have to pay for a little bit more. Someone has to go through the portfolio management, checking for the screening, making sure that the stocks are halal. So it's a little bit more work. So hopefully, inshallah, as time goes and the funds grow, these expenses will drop and we will be equal to the market when it comes to expenses. But I think for the sizes, I think all the funds are pretty much competitive in expenses. And the performance is always, I think, net of expenses. So they've taken out the expenses. They've included that in their performance.
So with our performance, even with the expense ratio, it's still mashallah perform better than a lot of the institutions out there. Next question. Yes, right here. If you do your own kind of trading, how do you manage downside risk in a halal way?
Aside from diversification.
So you're saying like you personally do your own? I think this is where Brother Bashar had brought up the concept of sukuks. There's two American-based sukuks in America. One is with Iman and one is with Azad that are not in the market. This gives you an alternative of a place to do, one of the goals of the sukuk is capital preservation. I think you went through the example of, if the market goes down 12% and it doesn't, then that's your gain right there. So that's something that you can probably look into. Do you guys want to add?
The downside risk, again, like you cannot do hedging, no derivatives, no short selling, no options, etc. All of these are not recognized as a Sharia compliant tools. So what leaves the Islamic investor is actually to focus on the strategic side by diversifying among sukuk and equity and maybe little cash. Not many options there, but I think most of the Islamic investors in it for the long term, very few people that they're investing for a month or 2 months or a year or 2 years. If that's the case, then you be in a sukuk fund, in a fixed income fund. There are options there that to provide you capital preservation. Of course, that's the goal. You cannot expect from a capital preservation fund similar to a large cap fund. Capital preservation, probably the return is 2 to 3%, where large cap fund can probably go 9 to 12%. So, but these are options. We in the industry focus, majority of the clients, they really come with a purpose, with a goal in mind. And again, we align them with their goal and with their time horizon and how much risk they are willing to take.
Go ahead.
I have a general question. Do you have any options outside the stock market, like real estate?
We don't do.
Yeah. Again, the sukuk is an option. You can really invest in those sukuk. You can do it through a fund, or you can purchase them directly. There are also real estate. Again, it's part of the stock market, but there are also some what they call triple net lease REITs, real estate investment trusts that invest in real estate properties. I looked at the history of those, and actually they're no difference than investing in REITs. There are some good quality REITs in the stock market, and the return is really very much the same, even better. The only thing that the only difference that in those REITs volatility is higher comparing with the non-tradable REIT. Not because the quality is different. The non-tradable, they're not traded. So again, liquidity is constrained. You don't have that much options. If I am a long-term investor, I wouldn't mind direct a good portion of my investment into real estate, because these really different in how they behave technically and long-term than the rest of the market, because they're really hard assets technically. Even if these, make sure that of course you follow the Islamic guidelines. You pick the 400 REIT company in the market, probably between 20 around the 20 of them that fit the Sharia guidelines. So you have to be very careful when you direct your investment into the real estate. Thank you.
It is really important because REITs, majority of them with late fees and stuff are national way. So, you had a question in the back?
I know we talk a lot about stocks and bonds and things like that. I was curious if you could recommend or if you know of any, like we own a chain of convenience stores and gas stations, so it's mostly actual real estate.
Can you speak up or get the mic? I can't hear you. Put the mic up.
Oh. All right. So I said, I know we're talking about stocks and bonds and things like that, but I was curious, any commercial companies, Islamic-wise, that you could recommend that do loans for businesses? I'm in the convenience store gas station business, so we own like 9 real estate. Our house we financed through Islamic way, but it was really tough to get a loan for like $300,000. So when you get into the commercial side of things, it's usually in the $3 million, $4 million range. So we haven't come across a company or institution that does Islamic loans on the commercial level. There's a lot they do on the residential level, but not on the commercial. I was wondering if you knew of it.
So real quick, the only place that I know that does not business financing, but does real estate, commercial real estate, is UIF and Devon Bank. I mean, if you guys know about this, those are the two that I know that do it. So, you know, if you want, maybe one of us can give you more information afterward. Go ahead.
Since you guys brought up, I'm in the business for the last 12 years. I bought basically cash for auction, tax-sale and custody sales. We have a group, investors, halal investors, pure Islamic.
Do you have a question?
If anybody has a question, I'm at group number 363. They come and talk.
Thank you. I had a few more. Go ahead.
Yeah. And annuities, actually, they are considered to be annuities are considered to be an insurance product, you know. And there are many different kind of annuities, but the most popular in the conventional industry, what we call whole annuity. So how they invested is a questionable, of course. Many insurance companies, they restrict how they invest the money, so they invest it conventionally. Mainly in debt instruments and securities, etc. The problem with the annuities at some point, and why people buy it, because they go after they accumulate so much money in saving, at some point they annuitize. So they convert that money into a guaranteed stream of payments that end at a particular time or date, like, or age, until death, you can do it. So it's opposite of the life insurance. This particular one, the conversion of money to money, Islamically, when you convert money to money, or when you exchange money for money, they have to be in exact amount. I cannot really sell $1,000 for $1,050 or for $2,000. So that's really a problematic. When you deal with money or money alike, currency or debt, you have to be in exact amount, and they have to settle immediately. This is called the rule of sarf. The Prophet, peace be upon him, of Abadah ibn Samit, narrated that the Prophet said the famous hadith, الذهب بالذهب يدا بيد ومثلا بمثل والفضة. This is very famous hadith. That's where, so in the annuity, you get into what we call riba of the bay'a, because you really sell money for money. And that's really the problem with those. So you can use, there are few insurance companies allow you to invest money in those annuities. Very, very few insurance companies. They're not very popular. And again, that's not commercial or retail insurance. They're really high-end institutional insurance. They can allow you to invest the money, but again, you don't annuitize. That's really the problem. Thanks.
Go ahead.
Okay, so this is really, you know, Roth IRA, you're restricted on whether you can invest into Roth IRA. Roth IRA, the money is both tax and growth tax free. Usually you're limited, your joint household income should not be more than $165,000, $190,000 now, $190,000. So people who really are not, are earning more money, there is a way that they can contribute, which they go and establish a traditional IRA, fund it, and then immediately they do the conversion. So they do like 5,500 if they are less than age 50, or 6,500 if above age 50, and they conversion. Be careful when you do this, make sure you don't have an IRA rollover account, because if you have an IRA rollover account, you're not gonna benefit, because you know you have to do it proportionally then. So it's really a very smart way of taking advantage of these tools, and we always advise clients, be very greedy with Uncle Sam. Be very greedy when you have an opportunity to save on taxes, because this is really excellent. If you have an IRA rollover, you may want to roll it to a 401k, to a qualified plan with the employer, because that will be excluded. But it's very smart way of taking advantage and enhancing your retirement assets.
Back to Roth IRA, the headline is a regular IRA, if your joint income is under 190 or single income is under 130, is the tax deadline for next year. So if you're under that, you can still do it. If you're not, it will be very hard to do it by the end of the year, because you won't be able to open both and transfer. It's almost impossible. But it's not that hard. For people that do make more, after you've maximized your 401k, or at least maximize your match, the next thing that you should be looking into is a Roth IRA. And if you ever thought you can't do it, that's not true. You know, any one of us should be able to help you with that. Go ahead.
So, as you mentioned, like the portfolio with one of your companies, the idea is
to be passed around every speaker. So even when he speaks, it has to be passed to him, because the audio has to be recorded.
Your portfolio is we put the money in and we think long-term investment, the market goes up and down, and we just watch the money going up and down, but we think about the long-term investment. But do you like study the market and, for example, say to the clients, okay, this is really a good time from our knowledge, this is a good time to sell, and this is a good time to buy, so that you can maximize the profit to the clients if possible, because we don't know, we don't have any knowledge of economy, we just rely on you to do that, and we don't feel that this is happening. Like, the money is there, we just rely on the market. But what do you think about that? Like some expertise from you, when to buy, when to sell, and just the money, manage it, and we feel that there's something going on, and we're being smart and gaining some money.
Excellent question. So I'll take this one if you guys don't mind. So we have about 8 minutes left. So inshallah, if we don't answer the questions, feel free to come up. So you were asking about. Okay, let me get this before I take it. Sorry, we have two mics here that we're trying to manage. So you're asking about timing the market. And what I can tell you is that seeing people that have tried to time the market, it's very, very difficult. And the advice of most of us would be that the people that usually win in the market are people that have steadily put money away over the long run. The market since its inception, 1928, has gone up about 9.6% annualized. The Islamic funds, as I mentioned, you know, if you combine two of the oldest, has gone up a little over 10% annualized. So anyone that tries to time the market, or if you have friends that are like, oh yeah, you know what, I bought this stock, majority of the time I can tell you when you really sit down and talk to them, they're not telling you about their losses. And if they do, majority of the time they're not beating the mutual funds that have been around for a while and that have been steady. Now, Warren Buffett has a very famous quote that says, you know, when everyone is going into the market, that's a good time to stay away. And when everyone is staying away, that's a good time to go away. I'm paraphrasing, you can get the exact one online. But it's almost impossible to find it. Like many people, I mean, this is the main question now. Oh, do you think the downturn is coming? Should we do something? The answer is no, you shouldn't do something. If you've been saving steadily on a monthly basis, you should continue to do that, because that is how you'll be putting some money in when it's up, and you'll be putting some money in when it's down, and you'll be steadily getting it. Now, if you really truly believe yourself, and no one can tell you this, no one, if someone tells you they can tell you this, I would run as fast as I could. And you guys please correct me if I'm wrong. But if someone says they can time the market, they're completely bogus. So if you think really it's down, then for the next few months, put in extra. This is a good time to put in extra if you really believe it's down, but don't try to time it. You will very likely end up losing, which is what happens to the majority of the people, but they won't tell you. That's really the truth of trying to time the market.
My advice is don't waste your money on timing the market. Spend your money on finding good quality managers, have a good asset allocation, spend money on identifying your risk appetite, defining your financial goal, rebalancing. Those really can produce far better results than timing the market. It's just useless. That's my experience.
Let's take 2 more questions.
Actually, the question is very good. It's probably one of the last couple of weeks, that's probably the most people want to ask is, what should I do with my money? Should I leave the market, or should I stay? And obviously the consensus here is you should not be timing the market. But at the end of the day, you have to have a plan. And you should, internally in our company, when we see the market going down, like the portfolio manager might change the allocations to go from stocks that might be very high growth to more less risk-averse stocks that would, with controlling the downfall. But you as an individual must make your own decisions. So you need to make sure that you're comfortable going to sleep at night. So that's one. But for us, we recommend that you stay in the market over the long course, because you're looking at it past the 3 months, past the 6 months. If you're going to look at it on an everyday process, you're going to have a roller coaster ride with your emotions. You're going to wake up every day, you're not knowing, you can buy this when it went down, then one day on Tuesday or Wednesday it went up 1,000 points, or Wednesday went up 1,000 points, the stock market. And this affects, if you had sold, you just lost out on the 4 or 5% gain. So you want to be careful. If you do decide that you think that the market is, you have some insight that nobody else has, and people have those feelings, you can make decisions on your own to make yourself feel comfortable. Because if you can't handle the risk, then maybe the market is not for you. If you don't want to take, if you can't take that 10% drop in 1 year, then that's an issue. But you should look at things at a bigger picture. I think if you're in the market, it seems like a lot of hands went up when they're talking about their 401ks and IRAs. Everybody last year made 25, 30%. Am I correct? So if somebody loses 10% this year, let's say, you're still up ahead. You should keep this in perspective. So not to be just looking at the last 2-3 months, or look at, okay, I made 15% this year and now I'm down again. So you want to be stable. You want to be able to make sure that you're looking for the horizon for the next few years. If you need the money today, then maybe yes, you're right. Then you should get out and make sure that you have the money in cash. But you should look at the long term.
We'll take the last question from.
I also have some questions that I think they're important. Yeah. No, they're,
Let them come up,
yeah.
I guess, because there's like 5 more here.
What kind of companies we own? Oh, okay. Our company is Iman Fund. That's IMANFUND. And I'll let everybody introduce.
Yeah. And our company, Azad Asset Management, we have 2 mutual funds, the Azad Ethical Fund with ticker ADJEX, and the Wise Capital Fund with ticker WiseX. These are publicly traded.
I work for Amana Mutual Funds. Fund, as I mentioned, for 20 years. We have 4 different funds. 2 of them are large cap American funds. One is a Sukuk fund, and one is a emerging markets fund. Do we want to do one more, or do you think we should just, there's more hands as well. Okay, yeah, that's fine. Go ahead. Yeah.
Can you elaborate more on the criteria that you use to decide that a company is halal to invest in? Obviously, there are some factors like they are producing alcohol or selling alcohol, But suppose selling alcohol, what is the percentage of the business? And there is more criteria that is difficult to judge. Like, for example, are they making weapons? What are these weapons used for? And then after you purchase a company, if you have a significant percentage on it, you are also responsible for their activities. Suppose you buy a pharmaceutical company, they are abusing people like that, they are raising the prices too much. Do you actively participate in meetings with the companies and in managing those companies to voice your concerns? Thank you.
I'll handle
it. You know, these are really good questions, but I think the last part, which is called shareholder advocacy. Now, we've been doing a lot of shareholder advocacy. We don't invest in companies of weapons, companies that they produce weapons or support defense industry. And we get involved in what we call shareholder resolutions. In other words, we file for a few shareholders resolutions in 2019 with Chevron, with Amazon, with Google, with a few beverage companies for issues about human rights, about some privacy issues. Like, for example, Chevron, we addressed Chevron for their business in Myanmar, where the government is committing genocide against the Muslims. So we asked Chevron to, divest from Myanmar. So yeah, we're involved, and I think Islamic investing companies now they are becoming more involved in what we call socially responsible or ESG, because again, this is in the core belief of our faith. يا أيها الذين آمنوا اتقوا الله وقولوا قولا سديدا. There are so many verses in the Quran asking us to be witnessing for justice and to be pro-justice and pro-fairness. So that's the issue. Now, for the issues about companies, the criteria, I refer you to IOFI. If you go to their website, iofi.com, it will explain standard number 21, the Sharia basis of it. It's a very long one, but I encourage you to visit IOFI. And by the way, the IOFI guidelines, the Sharia standards, are now 60 of them. They are really published in Arabic, English, French, Russian, Urdu. The latest one was Urdu. And I encourage all the people who really care about halal investing to educate themselves about these spaces. Some of these books may require some background in fiqh, but at least you can follow the guidelines, and educate yourself about it. IOFI, AAOIFI, Accounting and Auditing Organization for Islamic Financial Institution. It's based in Bahrain. It was established in 1992 by a group of the scholars of the Ummah, who's you find it. And they issue these standards. They're not-for-profit organization, and they cover everything about halal finance, from investing, banking, takaful, waqf, zakah, you name it, it's all there. I'm sorry?
Auditing and accounting organization of Islamic finance institutions. We all have a booth at the bazaar. It's actually in the same row C. So as you guys go through, if you miss something, you can ask us. As I mentioned, we'll all stay here as well afterwards to answer everyone's questions.
Just to add real quick, I think just regarding those income, that's why their purification is there, that Brother Bashar mentioned. So that takes care of, that you try to address and repair the purchase when you're buying a fund that is not 100% Sharia, because ultimately we would like to have 100% Sharia, but when you don't, you try to rectify it, to remify it by purifying some, the funds.
So. I'd also love to give you a quote. With that, inshallah, let's conclude. Please come up. We're going to be here, so please come up.